Imagine this. You're 16 years old, you've got a part-time job, and you save up $100. Now, instead of spending it all on sneakers or video games, you put it somewhere, and over time, that $100 could grow into $1,000, $10,000, or even more. Sounds magical, right? Well, that's the power of the stock market. If you're a teenager or young adult who wants to understand money and investing without the boring textbook talk, you're in the right place. Today, I'm breaking down the stock market in the simplest way possible. No complicated jargon, no Wall Street nonsense, just a straight up guide so you'll know how the game works before you start playing it. Okay, let's start with the basics. Think of the stock market like a giant marketplace. Instead of buying shoes or snacks, people are buying pieces of companies. When you buy a stock, you're basically buying a tiny slice of ownership in that company. Imagine Apple is a giant pizza. If you own one share of Apple, you've got one little slice of that pizza. Now, if Apple does well, say they sell more iPhones, your slice becomes more valuable. If they mess up, your slice shrinks. So the stock market is simply a place where millions of people are trading these slices of companies back and forth every single day. Good question. Why would a company give away slices of its pizza in the first place? Simple. They need money to grow. Let's say a small sneaker brand wants to expand, open more stores, hire more staff. Instead of borrowing money, they can sell shares of their company to the public. In return, everyday people, like you and me, get the chance to invest and grow our money as the company grows. So companies get the cash they need and investors get a chance at profits. It's a win-win, at least when things go right. There are mainly two ways you make money in the stock market. One, capital gains. That's when you buy a stock for, say, $10 and later sell it for $20. You pocket the difference. Two, dividends. Some companies share their profits with shareholders. Think of it like a thank you check for believing in them. But here's the catch. Stocks can also lose value. That's why investing is never about get rich quick. It's about patience, strategy, and making informed decisions. Now, a lot of people, especially teens, get scared off because they think the stock market is basically gambling. But here's the truth. Gambling is based on chance. Investing is based on research, time, and discipline. Yes, you can lose money in the short term. Stocks go up and down all the time. But history shows that if you invest in good companies and hold for years, the market tends to grow. Another myth? You need a ton of money to start. Nope. These days, apps let you invest with as little as $5 or $10. That's literally cheaper than your Starbucks order. Let's peek behind the curtain. The US has two major stock exchanges. Think of them as giant digital malls where stocks are listed. Investors place buy and sell orders through brokers or apps. Behind the scenes, it's like a massive auction, with prices changing every second based on supply and demand. If more people want to buy Apple stock than sell it, the price goes up. If more people are selling, the price drops. It's like sneakers on resale. Hype pushes the price higher. No hype brings it down. All right, let's get real. Why should you, whether you're 15, 18, or 20, care about this stuff? Because time is your superpower. If you invest just $100 a month starting as a teenager, by the time you're 40, you could be sitting on hundreds of thousands of dollars, even if you never increase that $100. That's the power of compound interest, the eighth wonder of the world, as Albert Einstein called it. The earlier you start, the less you need to invest to build serious wealth. Now, here's the part everyone wants to know. Where do you actually start? Step 1. Don't chase hot stocks or what's trending on TikTok. Instead, look into index funds or ETFs. These are basically bundles of many different stocks all in one package. That way, you're not putting all your eggs in one basket. Step 2, think long term. Don't panic if the market dips tomorrow. Remember, you're planting seeds that grow over years, not days. Step 3, keep learning. The best investors are lifelong students of money. So here's the bottom line. The stock market isn't some scary Wall Street casino. It's a powerful tool to grow your money, especially if you start young and play the long game.